Assalamualaikum and hi everyone. Welcome back to the video. And today we are going to see insight, a super important concept that can totally change the way you think about money and the decision and cost of production. And in this chapter, we are going to see three modules. The first one, we are going to see what does it mean by economic cost. The second one, we are going to see what does it mean by short run production relationships and the cost associated with it. And then for number three, we are going to see the long run production cost. Bear that in your mind, cost under short run production is different from the cost under long run production. So without further ado, let's see what we are going to do in module number one. So under economic cost, you are going to see there are two types of profits. Okay, in fact, there are three types of profits that accounting profit, normal profit, another one, economic profit. And then for the second one, you need to know by the end of this module on how to calculate total revenue, the explicit cost, implicit cost, average cost, and also the marginal cost. So let's begin with economic cost. So what is it exactly? Economic cost. Well, ladies and gentlemen, it's not just about the money you spend directly. Economic cost includes all the costs you face when you choose one action over another. This means we are looking at both explicit cost and also implicit cost. So now let's put it in number. Let's do a little thought experiment together. Imagine this. You have been working at a job that pays you 50,000 a year. It's a steady gig, but you have got a burning passion to start your own business. So you take the plunge and quit your job to follow your dream. Now, let's break down the cost. Now, let's talk numbers. To get your business off the ground, you need to cover some upfront costs, isn't it? So, for example, rent for your office space, the supplies to get things started, and salaries if you're hiring any help. Let's say all of this together add up to $20,000. So these are your explicit costs that it is the money you are directly spending to make your business happen. The hidden costs, of course, there's more. By quitting your job, let's say you quit your job, it means that you are also giving up the 50,000 salary that you used to earn. This is what we call as implicit cost. That is the value of what you are sacrificing to pursue to your new business, right? Total economic cost. What is it? So when we add it all up, the total economic cost of starting your business is actually 70,000. That's 20,000 in explicit cost and 50,000 in implicit cost. Next, we are going to see what does it mean by accounting profit and normal profit. We have talked about economic cost and how it includes both explicit and implicit cost to give you the full picture of your financial decisions. Now, from that foundation, let's talk about accounting profit. Accounting profit is the profit you see on the financial statement, on the report, annual report. It's pretty straightforward. It's your total revenue minus your explicit cost. These explicit costs, as I said just now, include things like rent, wages or salary, materials, and also utilities. It is the money you actually spend to keep your business running. So that is accounting profit. Remember the difference between firm's total revenue minus its explicit cost. Now let's see how does it different with normal profit. This one is a bit deeper. Okay, normal profit is the minimum amount of profit needed for a business to stay in the game. It is basically your implicit cost or the opportunity cost of the resources you are using. It is actually what you would need to earn to justify staying in business instead of doing something else. So let's recall explicit cost. Explicit costs are the ones you actually pay out. Okay? Internet charges includes advertising expenses, for example, also includes in explicit cost. All right. And if you do, for example, FB boost, okay, to expand your advertising, it is also under explicit cost. So basically, it is the cost that the ones you actually pay. What about implicit cost? As I said, it is a bit trickier. There are the opportunities you miss out when you make a choice. For example, if you decide to start your own business, the implicit cost could be the salary you would have earned if you stayed at your job. All right. Other examples of implicit costs are your own time doing business, your capital using your own money, and if you own a building, the implicit cost is the rent that you can earn if you lease the building. So, do you understand or not? To test whether you understand, try this one. Okay? What I want you to do is pause this video for several minutes and try to do the exercise. Based on the information given, my advice is classify them whether they are explicit or implicit cost. From there, calculate this question. Calculate the total revenue, calculate the explicit cost, identify and calculate the implicit cost, calculate the accounting profit, determine the normal profit, and also calculate the economic profit. So, pause, try, and good luck. I will see you in the next video for module number 2.